Well, as the dust clears from the global sell-off yesterday, our next guest believes the downward trends in the energy market and the Chinese economy will not undermine the global economy. Joining us now is RiverFront Investment Group Chairman and CIO Michael Joines. Welcome to you, sir. Happy New Year to you.
Good to be here.
So something that caught my eye in your notes, the escalating diplomatic conflict between Saudi Arabia and Iran could exacerbate the oil glut. Explain that.
Well, yeah, as your prior guest was talking about, we're seeing production come offline in the U.S. and the North Sea. But if this conflict between Iran and Saudi Arabia continues to escalate, the way Saudi Arabia punishes its enemies is
pump
oil.
Yeah.
And they keep that production high, they keep the prices low. So I think it's very possible that the reduction in production that we're going to see in the U.S. and in the North Sea is offset by
So what
Saudi
was the
Arabia.
initial reaction then? Because oil did move up on the news.
You know, the gut reaction of the markets is, oh, unrest in the Middle East. That must be bad for supply. But, of course, in this instance, once the market kind of sorted it out, they realized, nah, the likely reaction is more production, more supply.
All right. So you say that there's a couple boogeymen in the room. There were the boogeymen of 2015, and they showed up yesterday on the first trading day of the year.
Without question. The boogeymen of 2015 were oil prices, low oil prices, and a weaker Chinese economy. And unfortunately, we're seeing them back in 2016. But we think that the market is really misreading the implications of these two events. For one thing, low oil prices are bad for Saudi Arabia. They're bad for Houston. They're good for almost everybody else. And so, you know, the fear of a global deflationary spiral, we just think is incredibly misplaced.
What about the loss of jobs that we have seen out west in this country as a result of lower energy prices?
We call it shifting gears. The gear that the U.S. economy has ridden since the Great Recession has been the energy expansion, great jobs being created all through the Midwest, and we are losing that gear. There's no question about it. But another gear is kicking in, and that is the U.S. consumer. We're starting to see wage gains accelerate beyond 2%.
Ah, that's where our economist, John Hilsenrath, comes in.
Exactly.
Well, so far, you agree?
So you talked about the other boogeyman, China, and I'll grant you that lower oil prices are good for American consumers, but the slowdown in China looks to be for real, and this is the second largest economy in the world. Why should we not be concerned about what's going on there?
So for one thing, recognize that because China pursues the Asian development model, it's an export-led, investment-led investment model. They don't provide a lot of net demand to the world economy. They take demand from the world economy. So just as Japan, the second largest economy 20 years ago, could go into a 20-year recession and the rest of the world keep chugging along, China, which is pursuing a very similar economic model, can go into a very long slump, and the world can keep moving along. Importantly, what is likely to be the implication of China's slowdown is another devaluation in the yuan, probably much more significant this time. They won't call it a devaluation. They'll say we're trading to a basket of currencies, but as long as that basket contains the euro and emerging markets, it's going to get weaker.
But that devaluation means a stronger dollar. A stronger dollar hurts American manufacturers, it hurts American exporters, and it shifts the gears of the economy away from the United States producing stuff that the rest of the world is going to consume.
There's no question that the big implication of China, and frankly the commodity space, is if you make stuff, you're going to face deflation, and significant deflation. And it's going to be hard for the 12% of the American economy that's based on manufacturing. But service prices are rising at 3% and accelerating rapidly, and that's the predominant component of our economy. So it's a wealth transfer.
But how much of that is in health care? And that's not necessarily, that's more of a burden on the individual.
Well, it's health care, but it's also, it's travel, it's Star Wars movies, it's tickets, it's all the services that we are the #1 producer in the world. There's a wealth transfer going on. If you make stuff, you're losing wealth.
So how do you invest in this environment where producers of stuff are getting hurt and services are benefiting?
I think the #1 theme is you want to be out of the emerging markets, because the emerging market economies are all based on making stuff. And if you compete with China like South Korea, you're probably in a world of hurt. On the other hand, if you are a service provider, if you are in the healthcare industry, biotech, if you're in the entertainment industry, if you are in the online industry where you're not, a bricks retailer, you are a clicks retailer. These are all the kinds of beneficiaries from the purchasing power that's being freed up from declining prices of stuff.
And by the way,
Right.
Megan, you know, healthcare services, we need healthcare services. It's not all bad. I skied into a tree the other day. It was very helpful that I had people there who could take care of me.
I was talking about the inflation specifically that you see in healthcare. That's very hard on the individual.
Right.
And that's where some of the money is going from that we've gotten from savings, right, in the lower gas prices.
It hurts the individual, but those are services like any other service that we can consume that make us better.
You got to watch out for
all
those
in
trees.
the U.S.
You know, they jump in front of you sometimes. All right.
they do, yeah.
He was taking a little bit too much risk on the ski hill, so this was all a cool thing, right, that you ran into a tree?
It's never cool. I don't care what you're doing. It's never cool to hit a tree.
Cool or fun
Hey,
about it.
thank
glad
God
you're
for
okay.
helmets. Thank God for helmets.
All right, Michael Jones, thank you.
My pleasure.